stock as well. But a lot of stocks are buzzing in trade, and one such stock is PPAP Automotive. The stock is up close to around 5% in today's trading session, and in the last couple of months, the stock has had a big run from around that 250 level all the way to around 350 if you just pull up a wider time horizon. We have with us Mr. Abhishek Jain, the whole-time director of the company, who joins us. Hi, Abhishek. Thanks so much for joining in. Congratulations on a very, very good set of numbers. First things first, your margins at around 20.5, 21%. Can you hold on to these margins for the next few quarters? And for FY18, what should your margin number look like?
Good morning, Nigel. Thank you for having us on your show today. See, for the quarter ended March 2017, we reported an EBITDA margin of 21.26%. And if you look at the whole year, financial year 16-17, our EBITDA margin is somewhere around 18.81%. So we are working very hard to sustain these margins, and we are basically focusing on operational excellence across the entire gamut of our organization. A lot of efficiencies are coming up, and a lot of mudda, which is called, which is a Japanese word for waste, is being removed from all the different operations.
All right. So you're looking at streamlining operations, and you're optimistic that you can hold on to these margins of around 21%. Well, for the full year, Abhishek, in fact, you delivered a growth of what, around 15% on the top line. For FY18, what kind of a revenue growth can we see? And if you could help us out, what is the current capacity utilization levels at your plants? Is it at around 60%, 65%? What is it?
We are operating currently at about 70% of utilization.
Okay.
And if you look at our historical trend for the last 3 years, we've always beaten the automotive industry growth numbers.
All right.
So we expect that in the next year as well, the same trends should continue. And apart from this growth, we are also targeting a lot of new customers. So this year, we will be starting supplies to Hyundai Motor India as well, which is a new customer for us. And in the previous year, we've added SML, Isuzu, and even Suzuki Motorcycles as our customer.
All right. So
obviously, we're listing more customers where we can provide them with superior value-added products.
All right, Abhishek. I think the street likes what you're saying. When we started off the show, the stock was up close to 5%. I just request my director to pull up the stock. In fact, it's up 7.5% as we speak. But Abhishek, so could we work with a margin of around 21% for FY18, and in fact revenue growth of around at least 10%, double-digit revenue growth? That's doable for FY18.
I would be very positive about the growth numbers, but EBITDA margin, I would like to stick to the financial year numbers rather than the quarter numbers.
All right, so around 19% is what you're saying you'll do.
Yeah. All
right, Abhishek, also, you're talking about getting a new customer, that's Hyundai. They are coming in there. Who's your biggest client? I think it's Maruti. They have more than 50-55% of your revenue pie. Am I right on that?
Maruti is anyways the biggest customer for everyone in the automotive industry.
Okay.
They're commanding more than 47% market share.
Right.
So for us also, they're one of the most important customers, and they contribute about 49% of our business.
All right. All right. Abhishek, also, I believe that you're having another plant that's coming on stream sometime during this year. Your Gujarat plant, what kind of a capex do you require from there? When will that plant be operational? And at full capacity utilization levels, what can this Gujarat plant bring to the table?
See, Gujarat plant, we are setting up at an initial investment of 15 crores right now.
Okay.
And this is basically an expandable kind of a plant for us.
Okay.
So right now, we're not making it a very big plant. We're just starting up our relationship with Suzuki Motor Gujarat. And so right now the revenues will be about 15 to 20 odd crores every year.
Okay, small. All right.
Yeah, it's going to be a small project to start with, but right now Suzuki Motor Gujarat is also planning to make about 2.5 lakh vehicles there.
All right.
But as they scale up their operations in Gujarat, we would be also scaling up our investments and our plans.
Abhishek, there's so much of talk about GST in your business. I think your major business is in body sealings for cars. What is your market share currently, and in fact, unorganized market, do they have a market share? Do you think GST will be a game changer, or do you think, in fact, it's not going to be a game changer for your scale of business?
For our products, there is no aftermarket or there's no unorganized player as such.
Okay, all right. So then it's not a big change. No big mover.
Yeah, it's not going to be a big change. And for us also, all our customers are OEM customers.
Fantastic. All right, Abhishek. All right, Abhishek. Thanks so much for joining. In fact, giving us those details. It appears the street likes what you're saying. In fact, the management sounding confident going ahead. On the top line, they're saying at least a double-digit growth. Margins, though we have seen 21% in the past quarter, they rather stick to around that 19% that they've done to the full year. And in fact, they have added more clients as well. Hyundai is the case. And point stock has spiked up close to around 9%. But in the last couple of months, as I earlier pointed out, that stock, in fact, has had a big run from around 250 to around 350. But let's slip into a short break. On the other side, fresh regulatory hurdles crop up for HDFC.